Hi, good morning. You're watching The Market right here on ET Now with me, Aisha Faridi, Anisha Jain, Avan Dabash in the studios. And the bull run seems intact, ladies, even though yesterday we did cool off after just about a touch-and-go moment with that 19,400 print. But mind you, it's been the sixth consecutive session of gains that we have seen. Yes, for sure, we managed to cling on to the gains. We didn't give up all of it. And yeah, it was the Bajaj twins yesterday which did the magic, while Reliance, of course, dragged. But look at the move on Bajaj Finance. Even though it's not one amongst the top heavyweights in terms of weightages on the index, but for Bajaj Finance alone to move 7% does push up the Nifty and does give it that much required cushion at a time when other heavyweights like Reliance, ONGC, they actually dragged in trade, as did some of the key banking names as well. But the good news is that the FIIs, they remain buyers consecutively for a fifth session, and the quantum as well has been quite robust. The interesting thing, of course, yesterday was that PSU banks as well as IT, some of these contra bets, they were the ones actually which held out. We'll, of course, highlight why the PSU banking pack was charged up. It was on account of some very smart quarterly updates coming in from some of these smaller ones, especially. Metals and energy, though, are yet to catch up, right, Anisha?
Oh, well, yes, but perhaps we can see that catch-up happening very soon as well, because sector churn is something that we have been watching out for. But, you know, the question that we're asking, yes, the bull run is intact as of now, but we're at the cusp of the earnings season and it could go either way. So are we near the top? Let's discuss some of the data points around that, because that's the key talking point as far as the market is concerned. Remember, the valuations for Nifty now stands at around 18.6 times and the 5-year average is 18.8. So we're very close to long-term averages as well. Even if you look at the stocks-wise performance, out of the total Nifty 50, 88% of the stocks are trading above the 200-day moving average. That means that they're already trading at the higher end of the range as per the technicals is concerned. Even if you expand the entire basket and look at Nifty 200, then also 77% of the stocks are above the 200-day moving average. And even if you look at the RSI indicators and other technical factors, our panel of experts have been suggesting that we are nearing the overbought level, and even the percentage of long index futures at the trading level is around 70%. Now remember, earlier when we had seen tops, that range was anywhere between 70 to 77%, and that's where the market reverses from. For now, we're entering that cusp of seeing a bit of a overbought territory at 70%, because over the last couple of years, I think this is one of the highest reading of 2023 so far. And over the last couple of years, when that percentage of the FII long index futures came in between 75 to 77%, we saw a bit of reversal over the next 31 sessions, and the drawdown was as much as 6%. So all we are trying to do is draw the corollary here that historically we have seen that these indicators do indicate that we are nearing the top. Will it happen this time or not? We don't know, because for now, there's no reason to worry. The Q1 updates have been quite healthy and the heavyweights are also participating a lot.
Oh, and more importantly, the FI positioning as well is extremely strong as of now. Yes, they are nearing the overbought levels, but not there quite yet. And we don't want to be setting the cat amongst the pigeons at all. We're just analyzing the data points.
Yeah, and another data point as well is that when it comes to the overall valuation picture as well, not looking too bad. And yes, of course, it is not just that we are isolated in this move. You have as well on a year-to-date basis seen some of the other global markets as well rise in tandem. But just take a look as to how the global markets shaped up. Of course, yesterday, the US markets were closed on account of the 4th of July holiday. On Monday, it was a bit of a flattish move with a positive bias for the entire Wall Street screen. Overnight, you did see markets in Europe closing with a slight negative bias, and even this morning, Asia isn't going with very great cues, as you've got most of the Asian markets that have gotten off on the back foot. A quick check-in as well as to what the GIFT Nifty is up to in terms of where our markets could potentially start, given as we flagged off that yesterday we wrapped up around that 19,389 mark. It's a flattish start on the GIFT Nifty at 19,500. But the other big talking point, remember, we are continually talking about how yesterday the Bajaj twins clearly led the gains. And if we just were to go by the comparison, looking at the two lending giants, and we're comparing them on a number of parameters, be it the market cap, the ROA, the price to book, etc. And it's quite interesting. You've got the overall market cap of SBI standing at about 5.3 lakh crores, 4.6 for 4.7 for about Bajaj Finance, just about 10% lower there in terms of their overall market cap. The retail loan as well for SBI at about 42.5. Bajaj Finance continues to remain very robust at about 79%. In terms of the loan growth as well, has scaled ahead at 32% for a Bajaj Finance, whereas SBI is close to about 17%. And even when it comes to some of the other parameters like the net NPA, etc., it continues to remain fairly stable for a Bajaj Finance. And Aisha, clearly yesterday, that's where all the action was, with the Bajaj twins leading the way in trade.
Oh yeah, absolutely. In fact, if we were to bring up, the year-to-date chart for both Bajaj Finance and SBI, I think the reason that we're trying to draw the comparison is that irrespective of a steady performance, no doubt about that these are the two giants within the lending space, look at how the stock market returns have been. So just bring out the year-to-date chart for both Bajaj Finance as well as SBI. And there you can see that there is a stark, gap between what Bajaj Finance has done and how the returns have been on SBI. So can really SBI pull off a Bajaj Finance or not? I think that is the bigger question. Avan just highlighted the corollaries into how, all of them stack up on each and every parameter. Let's see, SBI has been a bit on the sidelines year to date, whether that can actually play catch up. Can it actually fill the gap between that and Bajaj Finance? That is going to be a key imperative to look out for. Anyway, saying that, some of the PSU banks, and that's the reason perhaps that they were all that mighty excited, they have been all of this week. AU Small Finance Bank, Bandhan Bank, RBL, some of these smaller banks have come out with their quarterly updates, as has HDFC Bank, which we're just going to highlight on the screens. But very, very strong retail advances, the wholesale advances, the deposit growth as well has been pretty strong across the board if you were to pick up, all of these individually as well. IndusInd Bank too came out with its quarterly updates, and there again, the net advances have seen a growth of almost 4% on a sequential basis alone, and the deposits too have seen an uptick of about 3.25%. So the elevated loan to deposit ratio now stands at nearly about 87%. And yes, no different from HDFC Bank as well. The merged entity advances have seen a growth of about 13%. Those details will just come up for you on your screens as well. So yeah, focus banks, Anisha, no different.
Absolutely, focus banks, and as you talked about, HDFC is going to be perhaps one of those big ones to watch out for. Not a bad performance at all, almost a 15.8% growth coming in with respect to the advances that we have seen, and even the merged deposits have grown at the pace of around 16%. I think this is the first time that they're talking about the merged growth, so that will be important to track. We'll probably get our analysts soon to get us more details on this, but for now, it looks like that the advances are up 16%, deposits, I beg your pardon, are up around 19%. But let's welcome on board our chartists as well to talk to us about the technicals of the market. Naresh Mirani is with us. Naresh, hi. Good morning. Thank you so much for making time and speaking with us. All the updates so far from the banking space, except maybe a Bandhan Bank and maybe AU Small Finance Bank, have been quite decent. Do you think today the star performer could be the Bank Nifty?
So I would expect banks to do well. The smaller ones have started to look interesting more than the large cap ones. The large cap ones, it continues to be HDFC Bank, which can surprise closer to an all-time high. ICICI Bank, once it crosses that 960 mark, that would be a confirmation of a trend change here. So overall, banking space looks interesting. The small cap ones like Federal Bank have recovered well. RBL Bank is setting up for a longer term breakout. So overall, banks continue to be the leaders, and they have a little bit of a catch up to do with the Nifty. So positive on banks, the smaller ones look more interesting.
Okay, let's find out then what exactly looks interesting when it comes to your stock recommendations too. And Naresh, highlight for us your top ideas.
So first is a buy on Jindal Steel. The stock has shown a clear breakout above that 600 mark. 600 to 620 was a zone of resistance for the last many months. Also a relative outperformer in the metal space. In the last 3 times when there was a recovery in metals, it made new all-time highs. So expecting a fresh all-time high here also towards 650 levels, maintaining the view on the stock from yesterday. Stop loss now revised to 595, target of 650 plus. Second is a buy on Hindustan Unilever. Now, if you look at Hindustan Unilever, the stock has been a major underperformer in the FMCG pack compared to an ITC or others. The stock had peaked around 2500 odd levels in 2020 April. Post that, it made a top around 2800 odd levels, and now 2700, 2750 has been a resistance for the last 6 months. The stock is in touching distance of that breakout. Once this breakout plays out, we could see a quick move towards 3000. Also, the fact that the Nifty has moved up quite a bit, playing a little more defensive, and defensive stocks could do well. Expecting HUL to take leadership from here. Stop loss at 2650 and a target price of 3000.
Kunal, hi, morning. The fact that we were unable to hold on to the session top, 19,400 thereabouts, is that any sign of fatigue setting in, or should we not read too much into it?
Well, yesterday, in fact, Aisha, there were many indicators which actually indicated that the markets are entering into an overbought territory. Now, I'll give a sense of few of the indicators. For example, the put call ratio. Now, put call ratio is a very classic barometer to try and judge or estimate the sentiment on the markets, whether it's on the neutral mode, a pessimistic or an over-optimistic zone. Yesterday in the Bank Nifty, we managed to cross a put call ratio of 2.0, which is very rare that we see such kind of an elevated put call ratio. And from there, from those levels of 45,600, when the put call ratio entered the levels of 2 plus, Bank Nifty saw a correction of more than 400 to 500 points on intraday basis. So what we are now trying to enter into is some levels of overbought in terms of indicators for the market sentiment, both in terms of technicals. We saw the India VIX rising up higher from 10.7 to 11.6. We can probably expect this as an adjustment. But when you try and add more factors like the put call ratio, the RSIs, overbought RSIs for many of the stocks, large cap names specifically, then it gives a sense that the markets are entering into a bit of a stretch as such. So we could now expect that 45,600, 500 levels on the Bank Nifty could act as a resistance, maybe 19,500 on the Nifty on the spot levels could act as a resistance for the index. So what I'm expecting is that for the next at least few trading sessions, the pace of rally should slow down significantly for the indices. So a better sense of trading could be that on the intraday highs, when the index moves up 0.5% or so, I think it's a prudent enough strategy to try and book out profits from an intraday trading perspective, and then look to buy back when the index comes into a neutral or a slightly negative territory.
Interesting. But your stock bias wouldn't change to sell, would it? Would you still have buys?
So I will still have buys, but then there would be some stocks which I would probably even look at for shorting, like for example yesterday, which I indicated on HAL, a few candidates for shorting. But today I'm initiating a couple of buy calls and specifically focusing on the PSU banking names. So PNB is the first stock which I would suggest as a buy. Classical breakout, extremely strong charts, triangular pattern, inverted head and shoulder pattern. So combination of all of these patterns rising up for PNB would suggest a buy with a target of 62. Stop loss remains at 54. And the second would be a buy on NTPC, playing a bit more defensive with the PSU name. Stock perched at a fresh multi-month, multi-week high. So would suggest a buy with 201 as a target and stop loss at 189.
Okay, so that's a take coming in on NTPC as well, but we'll be watching out for a whole host of stocks today. So apart from the Q1 update, the big update has come in with respect to the rejig happening for Nifty 50, and it's largely on expected lines that LTIMindtree will become a part of the Nifty 50 going forward. This is from July 13th onwards, because HDFC will of course get out of that index as well. Now for LTIMindtree, this is what the street was expecting earlier as well. It's become the 5th largest IT company by market capitalization in any case after that merger, and the expectation that Nuvama had, for instance, was that there would be an inflow to the tune of around $125 to $130 million on account of a net basis. It's already replaced Tech Mahindra as the 5th most valuable company, and now the levers are in place because this is one of the fastest growing large cap IT company which is there. In fact, they're talking about how they're aspiring to continue to grow in double digits even in this year, when rest of the companies are talking about what, a paltry 4 to 7% kind of growth. So there is that expectation that double digit growth is likely to continue. Margins were hit on a temporary basis on account of the merger costs, etc. Now they are saying that they're aspiring to get back to the 17 to 18% margin band as well. There have been no major project cancellations. The valuation for LTIMindtree have come off substantially. Remember, at the peak, it was trading at what, 38 times, 37 times. That's come down drastically. It's now, if I have it right, around 32 times. So a lot of things are in place. So both in terms of this push for the inclusion into Nifty, plus the other fundamentals look good. And of course, we'll also watch out for JSPL on account of that, because that too has become part of Nifty Next 50, and there can be some sort of inflows for that as well. But quickly on the charts as well, Kunal, for LTIMindtree as well as JSPL, what would be the trade?
So JSPL would be bullish. In fact, yesterday also I initiated a buy on JSPL because my sense is it's one of the strongest, second strongest metal name in terms of price performance. Of course, the strongest being JSW Steel. JSPL yesterday managed to close above the 600 mark, and that's been a huge barrier or a resistance for JSPL. So that's one of the candidates of a strong buy even from current level. 640, 650 could be a near-term target, which I believe should be achieved for JSPL. And for LTI Infotech Mindtree, the interesting bit is I was looking at the comparison for LTI Mindtree with respect to Tech Mahindra and many of these other large cap IT names as such. And the price performance for LTI Mindtree has been quite attractive from 3700, 3733, the low the stock had made in March, April 2022. The stock is now at 5200 levels. Compare this with the likes of Tech Mahindra, which has recovered around 15% only from its previous swing lows. So that itself tells you the kind of outperformance or the stock outperformance the stock has shown. Again, excellent chart, stock confirming a breakout, and hopefully with the inclusion of the stock, I think it should see more liquidity as well as more trending nature.
Right, okay. Let's also hear it out then from Ravi Dharamshi as we slip into a very quick break on what he's making of the market texture right now. He believes that we are far away from getting into that overbought zone, irrespective of what the near-term trajectory, of course, is going to be. He doesn't rule out a near-term 5% dip in the market, but also believes that there's further headroom to go. In fact, he anticipates FI inflows to the tune of about almost $100 billion, and says that if you were to look at the historical averages, FIIs are still fully not into India.
I think this is a theme that is going to sustain for another 10 years, maybe more also, but let's speak about next 5-10 years. And if that is the case, solar is going to be the backbone. In fact, other places like wind are also doing well within that theme. So, as an investment opportunity, still it has not opened up for the listed market investor. There are still some bets available on the unlisted side. Listed space does not lend itself to investing. So the theme is there. We'll keep our eyes and ears open to see where the opportunity arises. But one has to be constantly focused on this space, because the maximum amount of money that is going to be spent in the world in the next 10 years is in the energy transition space. So the opportunities will come. You keep your eyes and ears open. Manufacturing overall is at a cusp where we are witnessing a gush. The order books are filling up very, very fast. The conversions time is reducing dramatically, and companies are able to pitch to the best against the best in the world and yet win orders. So that tells you that Indian manufacturing is really, really coming of age. So I will not be in a hurry to call the top of the theme so soon. If you see, I mean, it started in 2014 with chemicals. Chemical manufacturing was the first one to pick up. That theme ran for 7 years, and most of the companies, the worst performing stock in the sector was a 10 bagger. The best performing was probably a 150 bagger. So with that kind of returns in the offing, why would you want to sell just because it has gone 2x, 3x in a very short span of time? So we are very, very bullish on the manufacturing space. Within that electronics manufacturing space, the entire sector will grow at 25% CAGR. Possibly some companies can grow at 35-40% CAGR with inorganic also. So far larger companies are going to be coming out of this space with a far bigger profit numbers.
Welcome back, and the global cues indicating that it could be a bit of a soft start for our own markets this morning. But lots of stocks that will be in the news today. Q1 updates trickling in, and let's begin by talking about HDFC Bank. They came out with their Q1 updates just a short while ago, reporting the data of the merged entity for the first time ever. Let's also find out what the numbers have been when it comes to a Bandhan Bank, and Harsh is here to highlight just that. Harsh, morning.
Well, yes, good morning. Let me start off with HDFC Bank on a standalone basis. Really decent set coming in, 16% growth on the advances front. You're seeing retail loans continuing to grow quite strong, 20% growth on the retail loans front, 4% sequentially. Commercial and rural arm of the bank also grew a solid 29% year on year. You also saw corporate grow a bit, 11% year on year, 1% sequentially. That's a positive as well, with corporate growth coming back a little bit for HDFC. But really what stood out for me with regard to the numbers is the deposit growth, very solid, 19% growth on a year-on-year basis, 2+% on a sequential basis. You're seeing retail deposit growth at 21.5%, 2.5% growth sequentially as well. And you're seeing corporate also grow at around 2.5% sequentially. So on the deposit front, HDFC really gunning it up with the branches they are opening, as well as the deposit growth numbers. In terms of the merged entity, let's look at the advances, 13% up on a year-on-year basis, just about 1% sequentially. Now the combined book looking at around 22.5 lakh crore odd. This includes the corporate housing book as well. Let's also look at deposits, solid 16% growth on a year-on-year basis, even on the deposit front on a combined entity basis. So a couple of positives coming in there, but let's quickly switch over to Bandhan because that will be in focus as well. Loans and advances actually went up just 7%, where the system growth is 15.5%. That's definitely a concern. Need to try and understand deeper as to why the growth's not coming back. 6% down, in fact, sequentially on a slightly higher base, but nonetheless, that's a slightly poor number to look at. Let's look at deposit growth, though. Deposit growth was flat sequentially and 70% up on a year-on-year basis, which isn't so bad, but the advances growth will be a concern. Let's also talk about the leadership change coming in at Bandhan. CFO resigns. Sunil Samdani, who's been the CFO, he's been with the organization since 2015 and was with Karvi 6 years prior to that as well. So he had a wealth of experience, but now he's moving on. What he suggests is that he wants to pursue opportunities outside the bank, and therefore Bandhan will also be in focus. Couple of news items on that one.
Harsh, we'll leave it at that. Bandhan Bank in focus, as is the semi-annualized recategorization of stocks by AMFI, which will see several changes as well, as we understand. Now, stocks like Mankind Pharma, JSPL, PNB could actually be reclassified as large caps, while there are several small cap entries with recent IPOs too. Sharad is here from our research desk with all the details. Sharad?
Well, yes, in focus we'll be having the stocks, especially on the AMFI's semi-annual categorization. And do remember, this is for the second half of calendar year 2023. The list is expected to come out soon, and the fresh list will be valid till January 2024. Now, the stocks itself, Mankind Pharma, of course, recently listed, is expected to come in the large cap category. But from the mid cap to large cap, we see stocks such as JSPL, IDBI Bank, Canara Bank, TVS Motors moving into the list. But there is some stocks which will be actually moving down from large cap to mid cap segment. And these names include Nykaa, JSW Energy, Industars, Page Industries, and also Macrotech Developers. Now, from the small cap to mid cap, if you see the migration, the stocks which would be in focus would be stocks such as FACT, Bank of Maharashtra, Punjab Sind Bank, and Jindal Stainless. While from the mid cap to the small cap space, there is a certain migration happening with stocks such as Piramal Pharma, Fine Organic, Nippon AMC, as well as stocks such as Imami. But there are some new entries also in the small cap space coming in, and of course these are the newly listed ones, and these certain names are there such as IQ Lighting, Avalon Tech, Divki, Talk Transfer, Radiant Cash System, as well as Global Services.
Okay, Shara, thank you so much for that. We'll watch out for that. But then there are a lot of stocks which have run up quite a bit. In fact, as the markets hover and make fresh highs, we are seeing that stocks have recovered almost 20 to 50% from their lows as well, and a lot of stocks hitting fresh 52-week highs or all-time highs. But the question is, has the run-up happened already ahead of time and already ahead of fundamentals? Which are such stocks that you need to keep on your radar? What's the analysis like? Somit is joining us with all of that.
We have come out with this list from the Bloomberg terminal, and the filters that we have used is, firstly, there are at least 5 analyst recommendations on these companies, and all the share prices of these companies are trading above the highest target price that is there on the street. It is not the consensus target price, but the highest target price on the street. And we have come out with 7 names. Firstly on the list is New India Assurance, where the share prices are trading nearly 12% higher compared to the highest target price, and this run up on the share prices could be on the back of strong Q4 numbers, cheap valuations, but analysts continue to remain on the sidelines because they are expecting weak underwriting profits and higher expenses going forward. When it comes to GI&TD, that stock is trading around 11% higher compared to its highest target price on the stress, and this could be on the back of government's strong push towards renewable energy, which could boost the new transmission capex cycle going ahead. But analysts continue to remain bearish on the stock because they are saying that the growth in orders and the margins are still factoring, that the street is factoring in, is quite aggressive. When it comes to India Cement, it is a strong demand growth and lower petcoke prices, but analysts continue to remain on the sidelines because of lower price push, limited debt reduction visibility, and poor ROEs of the company. When it comes to data pattern, it is the government's focus towards defense and domestic production that has led to the sharp run-up in the share prices. When it comes to Intellect Design Arena, now if you see strong deal wins, 20% revenue growth guidance and the buzz of a potential stake sale by promoter has led to this rise in the share prices. And when it comes to ICICI Securities, now the surge was recently seen when the company announced its delisting. Other than that, there is no other factor that could lead to such a boost in the share prices of the company. And lastly, when it comes to Torrent Power, it's overvalued and lower LNG prices which could curb trading gains have kept analysts on the sidelines, and they're still expecting the share prices to fall going ahead.
Okay, that's interesting as to what exactly some of the stocks are that have run up very smartly and too fast of late. Moving right on then, lots of other Q1 updates. AU Small Finance, RBL Bank, IndusInd Bank, as well as the likes of a macro-tech developers. Let's get in an insight as to what exactly they have indicated. We've got Vamakshi here to walk us through those updates. Vamakshi?
Well, yes, good morning. Let's first start off with IndusInd Bank. The company reported a very strong growth as far as advances are concerned. They grew by almost 21% on a year-on-year basis. Deposit growth, however, continued to remain a laggard, growing at almost 14.6% on a year-on-year basis. Now, the CASA did grow by almost 6% on a year-on-year basis, but we did see that the CASA ratio actually moderated sequentially to 39.9%. On the other hand, we have AU Small Finance Bank. The company also posted a good growth as far as advances are concerned. Advances were up almost 29%. Total deposits did grow by almost 27% on a year-on-year basis, but were largely flat sequentially. The CASA ratio, like most other banks, has moderated this time around for AU Small Finance Bank, coming in at almost 35%. Apart from that, we also have RBL Bank reporting a strong growth as far as advances are concerned. Advances grew by almost 20%. The CASA ratio, unlike other banks, has actually improved for this counter, but has remained flat largely sequentially, but has definitely seen an improvement on a year-on-year basis to 37.3%. On the other hand, lastly, let's shift gears and focus in on macro-tech developers. The company posted a mixed Q1 update. We did see that the company posted the best ever Q1 pre-sales performance. Pre-sales came in at almost 3,350 crores, an uptick of nearly 17% on a year-on-year basis and nearly 11% sequentially. And in fact, this was the fourth consecutive quarter of pre-sales that the company has reported of over 3,000 crores. Collections, however, took a hit, down 8% year-on-year and 18% sequentially, and that was mainly on account of some seasonal factors such as summer vacations as well as the monsoon season. The net debt, again, a bit of a negative for the company. It has risen sequentially, and that has mainly come in due to business development investment. So largely, those were all the stocks that you should watch out for on the back of their Q1 updates.
Right, we'll leave it at that, Vamakshi. Meantime, Samvardhana Motherson is going to be in focus today. The company has now inked a deal to buy 81% stake in Honda Motor arm Yachiyo Industry. As a part of the overall transaction, the two-wheeler business will now be transferred to Honda Motor before Motherson acquires this particular company. Shrishti is here, more to tell us about what this really means for Motherson.
Well, yes, a deal announcement coming in from Samvardhana Motherson, where they have entered into partnership with Honda Motor. They're going to be acquiring 81% stake in Yachiyo Industries. That's a publicly listed entity in Tokyo Stock Exchange, and they're going to be acquiring 81% stake in that particular firm. What the company is into, they have presence in the four-wheeler as well as the two-wheeler segment, and for their product category, that includes sunroof, fuel tanks as well as plastic products. So that's the foray by Samvardhana Motherson rather in the sunroof category is what the company has highlighted. And with this deal, the revenue contribution from Honda Motor in the portfolio of Samvardhana Motherson is expected to increase from 1% to 6% going ahead. Now let's talk about the financials of Yachiyo Industries as well as what kind of a valuation and equity valuation is being given for this particular deal. So it has been pegged at 1,306 crores when it comes to equity value of this deal. Other than that, Yachiyo Industry reported a FY23 revenue at 6,586 crores with EBITDA margin of 11.4%. But Samvardhana Motherson has highlighted that not just the sunroof and the partnership with Honda Motors, going ahead they can expand to different products as well as to different OEMs with the same product offering. Other than that, they also look out to transition to hybrid, will continue to see the use of the plastic fuel tanks. So that's all about the deal announcement from Samvardhana Motherson.
Okay, Shashi, thank you so much for that. And the deal has been taken quite well by the street. We, of course, got that upgrade coming in from Nomura as well, wherein they've upgraded the stock to a buy versus neutral earlier. The target price has been hiked to 105. They are saying it's a good acquisition given the cross-selling opportunity and also the geographical reach of the company will expand. They are seeing an EPS accretion of almost 7% for the company, and the valuations too are comfortable right now, and that gives the upside. So we're watching out for the stock in the trading session. But which are some of the stocks that Sanjeev Bhasin is betting on? And the next multi-bagger idea coming in from him seems to be Hindalco. Listen and why.
Hindalco is not only a play on the local TCRC margin. The Novelis pick has done exceedingly well. And if you're talking of Coke cans and the FMCG market expanding, then I think Novelis will be an outperformer. On the other hand, locally businesses are doing robust. Hindalco was set up in 1963 by G.D. Birla when he kept a captive power plant for aluminium. And nobody had the vision that time. Hindalco is a money spinner. And if you're playing the Mercy, firstly, Ajay, I am looking at the dollar coming to 2 digits. And I think commodities will do extremely well there. You've seen the recent run-up in steel stocks. I think it's a matter of time both ferrous, non-ferrous join in. On a valuation basis, I would put some more extra weight on Hindalco. I think it has a very good risk reward at this price. We could look at 475 coming in the next maybe 1.5 months.
All right, that's Sanjeev Bhasin's take on Hindalco. Meantime, Naresh, just let's get in a chart check on Bajaj Finance and Bajaj Finserv, the big heavyweights that drove the gains in trade yesterday. Are you of the belief that the charts are looking robust for a further up move, or perhaps a little bit of consolidation now?
So I would expect some bit of a pause in Bajaj Finance. Yesterday's gap up was a big one with very large volumes. But if you look at the previous all-time highs, it was closer to this 8,000 mark, which was done in 2022 start as well as in September 22. So 8,000 has almost 3 tops around that area. The very recent highs are also around 7,700. So last 2021 to 2022, there is a big band of resistance around 7,700 to 8,000. I would expect some bit of a pause, even if it's not a pause. The risk reward is not great buying at the first attempt at the new all-time highs. So I would wait for a fade off, let it come back down lower over a period of time, and then maybe look at it overbought in the near term and near a very significant resistance.
Okay, so that's the take coming in as far as Bajaj is concerned and the other lenders as well. But Kunal, what's your take regarding a couple of these pharma names? Syngene as well as Strides will be in focus today because Syngene has, of course, bought out a biologics unit of Syngene, which is worth around 700 odd crore rupees, and it's been called a win-win because while it will help the balance sheet of Strides, it is being called as a strategic buy for Syngene as well, which will add to its capability. The street is expecting there might be a bit of gap up on board. What will be your trade if that does play out?
Both of these charts are exceptional charts, I would say, Arisha, because Strides Pharma specifically, the last, I think, 4 or 5 months, the stock has seen consistent upside on a weekly basis. Now, at one point, we've seen the large cap pharma stocks making a slight comeback. Few of the odd mid cap names like Glenmark, etc., have made a good comeback. But Strides has made an exceptional comeback. I think from 250 levels, the stock is almost at 500 levels. 485, 487 is where the stock closed yesterday. So the stock has almost doubled in the last 3.5 odd months of the price recovery, negating the previous resistance or major resistances on the way upside. So it's a very interesting chart, indicates that a big reset is happening for Strides Pharma, and this could be a good candidate of a buy on dips as well as even a buy on momentum for such kind of names. Syngene, on the other hand, the stock has gone through a very slow, gradual and consistent uptrend. The stock has broken past above resistances. So the previous resistance for Syngene, where the stock consolidated for, I think, 1.5 odd year, was around the 640, 650 mark. Post the breakout, the stock has moved up higher by 15%. So it's a more of a calibrated rise. But then when you look at this in comparison with Strides Pharma, the charts for Strides are quite stronger as well as more, in terms of momentum.
Right. Okay, let's welcome on board Nishal Maheshwari as well and find out what he's making of the market right now. Nishal, hi, morning. Quite a few Q1 updates coming in from the banking sector. I mean, HDFC Bank, the first of the combined entity update just came out, and the advances once again have seen a stupendous growth of about 16%. Deposits have risen about 19%. This, of course, is on a year-on-year basis. The merged entity advances has seen a growth of about 13%. at a handsome almost over 22 lakh odd crore rupees. And add to that, of course, you've seen IndusInd Bank as well. The sequential loan growth has been strong at 4% versus 6% on a sequential basis. For RBL, the gross loan growth has moderated somewhat. And I think for Bandhan as well, there has been a bit of a moderation. What's your reading into the quarterly updates from banks?
Morning. Thank you for having me on your channel. I think this was expected. I think banking is in a, Goldilocks scenario at the moment. There is very good demand. Economy is doing pretty well. And we have, in the cleanest balance sheets in the last 1 decade. So definitely, I think this is a very good scenario as far as banking is concerned. We are expecting, given that the economy growth is pretty strong, so we are expecting that the robust growth as far as loans are concerned is going to continue for at least for the current year. So I think it's a good setup as far as the banking sector is concerned. Most of the banks have shown strong growth. What we need to focus is basically what RBI has recently put out is that there has been defaults in the retail sector, especially the personal loans. There, they have highlighted that now the outstanding or rollovers for a 30-day and a 90-day has been going up. So that is what we need to focus on basically when these banks go out and declare the results.
Okay, so need to watch out for all of that when these banks are report their results. And is there any pressure at all when it comes to those retail advances, what Nishal is also highlighting? But Nishal, what's your take regarding this deal that Motherson has inked? Have you read into it?
So we do not have coverage on Motherson basically, so not much to comment as far as Motherson is concerned.
Sure, but first of the real estate updates also came out, right? Lodha came out with their update, wherein of course on a sequential basis there was a drop, but that's because of seasonality. However, there seems to be a bit of a spike when it comes to the debt levels. Collections have been a bit subpar. Overall, for the real estate sector, what's been your take and which are the top recommendations?
We continue to be positive on real estate. I think the cycle has turned, and this is unlike other sectors. Real estate cycle historically has been at least 5 to 7 years. So I think this is maybe the second year as far as real estate upturn is concerned. So I continue to believe basically that at least the initial phase you will find strong growth coming in. There is a lot of pent up demand in the system. I think there was some slip up basically because the rates went up too fast. So you will see some cooling off happening, but I think the underlying demand continues to remain strong. As far as the sector top picks are concerned, we continue to like Godrej, Shobha, and Macrotech in that order.
Right. Okay, in fact, we're going to be chatting with the Godrej Properties Management today as well in the due course of the show. And Anisha, I'm still stuck on Realty being the best year-to-date performer.
I know, it was quite a bit surprise for me as well. Didn't see that coming.
Absolutely. Kunal, would Macrotech make it to your list of chosen ones from within Realty?
Not really. I think the stock still has a long way to go in terms of proving its metal consistency of price trend. So what we've seen is huge rounds of volatility for Macrotech in the last 6 months. So there were two phases where the stock corrected, I think, more than 20-25% in a very short span of time, fell very sharply below the 200 moving average. Yes, the stock has recovered, but then the recovery is more or less in line with how the sector has shaped up. So we tend to identify the leaders or the strong performers or the initial performers which tend to lead the charge for a sector. And I think in that regards, the beating still lies with the likes of DLF at current levels. The stock has been showing a lot of strength, now closing in towards that 500 mark. Anantraj has been another mid-cap name which looks attractive at current levels.
Okay, that's the take coming in on some of those real estate stocks that Kunal finds attractive. But Nishal, just a short while ago, we were alluding to the fact that some of the heavyweights haven't really played catch up, Reliance being a case in point on a year-to-date basis, just up about 0.5% to 1% or so. What's the outlook on Reliance Industries from a fundamental standpoint?
So I think Reliance continues to remain a buy for us, but there are no foreseeable triggers at the moment as far as Reliance is concerned. I think yesterday's phone launch, it's a two-edged sword. Basically, it cuts both the side. So once you start cutting, I think Bharti is going to react, and that's why we saw basically that once again both Bharti and Reliance corrected. So that is the situation as far as telecom is concerned. We continue to see that there is issues as far as petrochemicals is concerned. There has been over demand. Prices are still going down. China's production has gone up basically, and they are exporting in larger amounts. So what you used to see a decade back, all the capacity which Middle East had put up for petrochemicals for China has sort of replaced it now in-house, and now that capacity is available. So that is putting pressure on the petrochemical cycle. So I think two of these Reliance's sectors are coming under pressure. On the retail side, we have been maintaining this, that the retail, we are not seeing strong demand. Sector after sector, basically, they are saying there is not enough demand, not strong recovery in the current quarter. So I think all the three sectors for Reliance at the moment are a bit tepid. So I think a good price if it corrects to accumulate.
That's the take coming in on Reliance. Still a buy, though no fresh levers there. But just let's quickly talk about some of the brokerage action this morning as well. And a lot of downgrades actually coming in. Let's start with Kotak itself, who's actually downgraded delivery to reduce all the way from buy. They've cut the target, or actually they've made the target price to be around 390. And they are saying that the competitive intensity is going to rise. So that's delivery for you. Kotak has actually also downgraded Cummins. It's a downgrade coming in from to an add from a buy earlier, and the target price stands at around 2020. There's also Jefferies, which is also downgraded Dixon Tech to a hold. They are saying that the risk reward is a bit stretched at this point of time, and the target stands at 4,550. So those are the fundamental kind of recommendations coming in from the brokerages. But Naresh, what's your view on the chart of these companies? Dixon, Delivery, Cummins, do you also believe that they are run up and it's time for consolidation?
Absolutely. So if you look at it, Cummins has had a one-way run. So the stock was closer to 1100 this time last year, or closer to almost 1000 levels. And today the stock is at 1900. So it's almost doubled up in the last 1 year. In this case, even in the short term, the stock broke out about 1700 a couple of months back, is at 1900. It's been the best performing name in the capital goods space relatively to, and the other one is only Siemens. So correction out here would be normal, or a time correction wherein the stock goes nowhere. Dixon in the near term has moved up from 2900 to almost 4700. And 4700 was the resistance for the stock from 2022 to 2021. So some bit of a pause here also. It's just that the rise has been too fast, and there are a bunch of resistances in Dixon. So both these names look more like a time-wise correction, not a sharp price correction.
Well, the one stock which really got shook off yesterday was Eicher Motors. Let's bring up that one, and then let's stack it up with Hero MotoCorp. Of course, concerns around Hero and Harley's new launch. In fact, brokerages are saying that the bike has come in at a very attractive price point and actually could help Hero gain the share in the 250cc segment. Now, what could that do to the dominance that Eicher has within that space? That is what rattled the market a little bit. But Nishal, you believe that, for Eicher, this is a knee-jerk reaction, or do you think this is going to be a long damaging thing? I mean, for someone who's cherishing almost 70% of the market share in the 250cc segment, even a 10% dip would be meaningful.
So I think when you are holding such a large market share, there is only one way to go, is basically down. And given that there has been a very good sales for the last 5 years in that particular segment, obviously it was supposed to attract competition, and the competition has come. Now what we have to see is basically that Harley's launch is a very good price actually. I'm saying a 350cc mobile basically coming out at around 229x and maybe another 40,000 bucks basically on the road. So maybe less than 3 lakhs. I think it's a very attractive price compared to basically if you look at Enfield and in a 400cc is all going at 3.5 lakhs. So I think there is going to be pressure, and I think there is a fairly good following in that higher price, higher capacity segment of Harley across the world. So I'm saying there is going to be competition, and then Bajaj is coming with its Triumph. So in that segment now, it has to face competition, and the market share will go down. So there is no doubt about it. The only thing what you have to see is basically whether how does Eicher react, basically, whether it also cuts down prices and tries to compete with them. That's what I think the market is worried about. Obviously, the volumes are going to get impacted. So I think that's the way basically the market is cutting at the moment.
How much more damage for Eicher, and would you be tempted to buy into Hero?
Well, yeah, Hero MotoCorp could be a good buy at current levels. The stock is showing signs of breakout, but I think Eicher Motors could probably take some bit of more time before it comes into any kind of a lucrative territory in terms of oversold or price supports for itself, because the stock in the last 1 or 2 months has shown a lot of resistance at the 3700, 3750 mark. I think there were 3 or 4 attempts towards the 3750 mark, but the stock has been unable to surpass those levels. Even the previous highs for Eicher Motors were made last year, if I'm not wrong, and I think the stock is substantially lower, even with a matrix of 3750 from those previous highs of the previous year. So I would believe that the stock would probably take some bit of more time to resurrect. The near-term supports for Eicher Motors would probably lie closer to 3150, 3200 marks, which means that could be an additional correction of at least 200 to 50 points before the stock actually becomes oversold.
Okay, so that's a technical take coming in on a couple of these auto names. But Naresh, quickly wanted your view as well regarding the NBFC, that's LIC Housing Finance. And the reason I'm asking you that question is because it's going to replace HDFC in the Nifty Financial Services Index as well, right? And otherwise as well, that has had a good run. And separately, do you track the company called Genus Power? Because that made a big investment into the smart meter space, a tie-up with GIC happening, or any other stock from Power?
So track both of them. LIC Housing is interesting. The stock has been a relative underperformer in the whole housing finance space and as well as the NBFC space. The stock has gone nowhere for almost the last 8-9 years. The stock used to be 400 back in 2014-15 as well, and it topped out 800 in 2017. Then in the near term also, it has a bit of resistance around 410, which is a sloping trend line coming in from the last 1 year. If it can sustain 410, it could go very well towards 450 mark. So looks promising. Could see a move. Is actually a buy at current levels with a stop loss at 380, and could see a move towards 450 also. Genus Power is something where one should be a little skeptical because the stock broke out about 90-95 levels just a month back and was at 130 before the deal announcement came in. And whenever the stock has seen such a gap up, it has faded off and corrected 10-15% from the top. So I would say from this 145-150 mark, the stock would come back to 130-120 zones, and that is the time one can have a relook. In the near term, a 40-45% move before the deal announcement, and then another 10% move. So makes it a risk reward to be tough one. Wait for a fade off of 10-15% at least from the top.
That's interesting, some of the chart moves and of course the management interaction later on. But let's also get in some more fundamental stock ideas. Dipan Mehta, he's bullish on the likes of Praj Industries, Viatech Wabag as well as IDFC First Bank. Let's listen in.
So in the banks, we like this IDFC First Bank. I've discussed it on your show many times with Nikunj and other co-anchors as well. Basically, I think it's a very aggressive company. They built a solid brand. They are focused on building their retail deposits, and they have amongst the highest net interest margins in the industry. And it's a great sort of a growth stock to own at this point of time. And the capital goods, we're very positive on a niche player called Praj Industries. We discussed that also on your channel before. It's, of course, that company is chasing the ethanol opportunity, but they have got great export prospects as well as in India. I think the way the government is giving impetus to sugar companies to set up more and more distilleries, I think they should have no dearth of business. You could also add Viatech Wabag to that list. It's a water projects company, and we all know because of these weather patterns how important water is and water conservation projects are.
Okay, so those are the top recommendations coming in from fundamental experts. But what are the other stocks which are likely to be in news today? Well, of course, a lot of these Q1 updates. So on account of that, Bandhan, RBL, AU Small Finance Bank, all of these will be in focus. Nishan, I know you already spoke about the banking space, but just about these mid-tier banking names, the sort of beaten down names, Bandhan, RBL, that people were not looking at, and even Yes Bank for that matter. Is it now time to take maybe a contra call on any of these names?
So we have to watch them closely, basically. I think some of them have been making the right noises, making the right moves. I think Federal and all have already broken out and done a lot, very good job, basically. I think we have been tracking some of the other ones, particularly RBL. And RBL seems to be on the right track, basically. And they have exited with an ROA of around 1% last year, and the management is guiding it around 1.2. I think that seems to be on the right wicket, basically, with the new management in place. So let's see how the things pan out. But I think that is one stock which one can put it on the radar for watching closely.
Just a quick take on the charts, Nishchal, for some of Naresh, on yesterday's movers. Wanted to get in your outlook on an Ujjivan Small Finance Bank as well as an Aster DM, which shot up nearly 13%.
So Ujjivan Small Finance Bank has been in a strong uptrend over the last 3-4 months, as well as going back from June of last year. The stock was at 15 to 20 rupees back then, made a high around 30, 31, 32 levels, did a dip to 24, and has been making a clear high top higher bottom formation. So out here, would expect a move towards 45, 47 levels in the short term. Looks interesting, and the whole space has been doing well. So Ujjivan is still a buy at current levels for an upside from here also.
Okay, let's just bring up some of these pharma newsmakers. You know, there's of course Syngene and Strides, wherein Stelis is looking to sell Unit 3 multimodal unit to Syngene now for about 700 odd crore rupees. There's Oro as well, wherein CuraTech has announced a positive result for phase 3 trial of one of their key drugs. And then there is, of course, Lupin as well, which has acquired that 81% stake. They've got a US FDA nod for their ANDA tabs for oral suspension, and that's a 5 mg drug, the tablet that we're talking about. So these are a couple of stocks which are going to be in focus. Nishal, quite the right noises now coming in from the pharma pack, right? And the news flow as well has been steadying up. You can see that stock performance as well reflect that. Anything that you're bullish on from within pharma and believe could be a good buy at this juncture?
So we continue to like the large cap names basically in pharma. Obviously, I think Sun, Dr. Reddy's, they have been doing a very good job out there. No doubt the stocks are not cheap, but I think the outlook on them is much more steady, much more stronger, with a very, very strong strategy out there. So we continue to like the large cap pharma. I think Oro has done well, basically coming off from the bottom, and they are getting their act right. So I think that's another stock, basically a bit of an outlier, but looks interesting at these prices. So that is our top picks out there, Sun and Dr. Reddy's, followed by Oro.
What's your take, Nishal, regarding a few of these new age tech companies? And of course, the Paytm update is right there flashing for you on the screen in terms of how the month gone by has really panned out. The merchant payment volumes are up 37% year on year. But of course, year on year is not the best way to look at the numbers. Perhaps a quarterly basis is something that we should also look at. But Nishal, apart from Paytm, PB Fintech, Zomato, there are likes of Nykaa and Delivery as well, which haven't done as much. What's your pecking order within this entire space?
So my thought, I think I have actually shared it with you a long time back also. I see there has been at least 2 or 3 winners very clearly in the space, basically, who have been able to create a space of their own. And they have actually created new actually sectors on their own. So something like a Zomato, and that space was never there, basically, the takeouts. And that has been a space which has been created by them between Swiggy and Zomato. They are almost sort of a duopoly. So you have to look at some of these spaces, basically, which are very clear winners out there. have a very strong presence. It's a sort of a duopoly out there, and anybody to now challenge them has to spend, like I think between both Swiggy and Zomato have spent $5 billion each to reach where they are. So I think nobody is going to actually challenge them. So you have to look at those kind of spaces. I very clearly see Zomato out there. I very clearly see Policy Bazaar out there. Once again, has created a very strong space of its own. Paytm, yes, but I think I see a lot of people doing Paytm, similar kind of stuff what Paytm is doing. So we have to see whether it comes out as a winner, because I clearly see competition. Nika, I've been maintaining from day one basically that there is going to be a lot of competition out there, and I think it's going to suffer because of that. So I see clearly two spaces, Zomato and Policy Bazaar as clear winners out there, and we have to keep on watching others whether they are able to get their unit profitability right, and how fast they are able to achieve the profitability metrics. So that is that's a broad call I have on that space.
You know, the other one, which is, which we flagged off earlier as well, LTIMindtree. Remember, that's going to be replacing HDFC on the Nifty 50 index post the merger of HDFC with HDFC Bank. Now, according to estimates by Nuvama, like we flagged off earlier, LTIMindtree could see inflows of approximately about $150 to $160 million from passive funds because of this rejig and its inclusion into the Nifty. Nishal, just wanted your sense here. I mean, LTI already the fifth largest IT company, right, Anisha? I mean, could IT really see a turnaround of fortunes this quarter, or will it have to be a long wait? And within the IT pack, how would you stack up LTI?
So I clearly see that IT is a very good space, basically, at these prices to be bought out, basically, across the history, across the sector. And once again, I think AI is going to be a driver. Most of these stocks are available at good valuations after the correction. So I think it's a good pricing, a good time to actually start accumulating IT. Now, within that space, basically, we have to look at saying basically which are the stocks. So we, at the moment, because of valuation, prefer the large caps. Our top picks continue to remain as Tech Mahindra, HCL Tech, and Infi in that sequence. We like LTI in the large cap space, but I think valuation is a bit of a challenge at that moment. So I think the other three remains to be better placed. As far as inclusion of LTI is concerned, I think it was expected, but it only strengthens that now I think two sectors, banking and IT, is almost 60% of Nifty, and I think that should be a bit of a challenge for Nifty itself, basically.
All right, Nishal, good to have you on board. Thanks very much for sharing with us your outlook on individual stocks and your view on the markets. Let's find out those mid-cap strategies as we're gearing up ourselves for the pre-open rates this morning. And Kunal, what's on your radar from the mid-cap universe?
So from the mid-cap end, the stock which I would want to highlight at current levels would be Jindal Steel. That's a stock which looks attractive, trading above that 600 mark, closed above those levels on a short-term basis. So would suggest a buy with 630 as an immediate target and stop us at 600.
Okay, JSPL it is, target 630. Let's find out, Naresh, what's your top mid-cap call?
So that would be a buy on KEC International. The stock has been making slowly higher tops and higher bottom formations. But every time it has made a move, it has paused a bit. But good enough pause done for the last 2 months around this 540, 560 mark. A fresh all-time high, very close right now. Fresh breakout seen yesterday. Volumes are 3x up. Expecting this to actually catch more momentum going forward. Expecting a quick move towards 650. Stop loss will be placed at 550.
Right. Okay, let's tell you what else is happening outside the world of markets. And US President Joe Biden has once again called for a stricter gun control rule and a ban on semi-automatic rifles. Now, his comments come 1 year after a mass shooting at Highland Park, Illinois, which is the 4th of July parade, remember, that killed 7 people and wounded nearly 50 others. And if you found yourself reeling in the heat at the start of the week, it's because global temperatures have now hit a record high as of Monday this week. The average world temperatures, by the way, stood at 17 degrees Celsius. Meanwhile, the UN Weather Agency has flagged off the onset of El Nino. The WMO, or the World Meteorological Organization, is seeing a 90% chance of the phenomena persisting through the second half of the year as well. And more consumer-centric, there's been no relief on the red-hot tomato prices, though, and this kitchen staple is now worth about 150 rupees per kg across major regions in the country. In fact, the volatility in prices have been caused by clearly weather disruptions and production woes that have led to the surge in prices to around now 150 to almost 160 as well in some of the major cities across the country.
Okay, and getting to the latest weather update, IMD has issued yellow and orange alerts for heavy rainfall in Mumbai for this week. Rain lashed several parts of Mumbai during the early hours today itself. Maximum cities expected to receive heavy rain till Friday with moderate showers over the weekend. And fans taking a sigh of relief after Bollywood superstar Shah Rukh Khan was spotted at the Mumbai airport early morning today amid reports of an accident. The actor looking healthy and energetic in the visuals. The report suggested that Shah Rukh Khan had suffered a minor accident while shooting for a project in the United States, resulting in a nose injury. And he was promptly taken to the hospital where he underwent a minor surgery. Meantime, in the world of sports, the Board of Control for Cricket in India, BCCI, has appointed ex-India all-rounder Ajit Agarkar as the new chairman of the Senior Men's Selection Committee. The decision was taken unanimously by the Cricket Advisory Committee. He was also the sole nominee for the job. And in more sports news, it's Team India which has edged out Kuwait in the penalty shootout to clinch the 9th South Asian Football Federation Championship title. Goalkeeper Gurpreet Singh Sandhu's save in the shootout helped India secure the final winning point.